Hello and welcome to India Business Hour. I'm Shireen Bhan. The headlines that we're tracking for you tonight. The Nifty conquers the 25,000 mark for the first time as the markets end at record highs. Mid-caps underperform. The index loses over 500 points. Tata Motors reports a 6% revenue growth in Q1. Profits up 74%. JLR margins contract. Warns of production constraints in Q2 and Q3. ITC reports a mixed set in Q1. Revenues up 7%. Margins contract by 250 basis points. Volume growth is at the lower end of CNBC TV18's estimate of 2 to 3%. Infosys refutes claims of GST evasion by the central and state GST authorities, says the pre-show cause notice of 32,400 crore rupees is untenable as expenses were incurred by the company's overseas branch offices. A significant step towards the privatization of IDBI Bank. Sources say 3 potential suitors have been given fit and proper certificates by the Reserve Bank of India. That's an exclusive. The Union Labour Secretary Sumita Davra says a draft policy for the employment-linked incentive schemes announced in the budget will be ready in the 4 to 6 weeks. Expects the schemes to be rolled out this calendar year. That's an exclusive. The death toll after the Wayanad landslide climbs to 256 as hopes of finding survivors starts to fade. Over 200 people still missing as rains continue to hamper rescue operations. 8 Indians killed while serving in the Russian army, says India's External Affairs Ministry to Parliament. Another 63 are seeking early discharge amidst growing furor over Indians allegedly getting duped into joining the Russian army. The Supreme Court upholds the state's power to grant separate quotas for more backward groups within the scheduled caste and scheduled tribe categories, overturns a previous ruling that ruled subclassification as anti-constitutional. The court cautions states that such subclassification should be based on empirical data and not whims to meet political ends. Israel declares it killed the military chief of Hamas in an airstrike last month. This comes a day after the political leader of Hamas was assassinated in Iran. Fears of an escalation mount, with Iran's supreme leader pledging to retaliate. Indian shooter Swapnil Kusali bags a bronze in the Paris Olympics, gets India its 3rd medal. Lakshya Sen advances to the quarter-final of the badminton men's single after defeating compatriot Pranoy in straight sets. Well, let's start with the market action today. After flirting with 25,000 for the last few trading sessions, the Nifty finally managed to conquer it today. And this was the 5th straight session where the major indices have closed at new records. So that's the Nifty. 25,010 is where it closed for the day. The sensex up 126 points. Weakness today in the mid-caps, down by about 500 points, is where it closed for the day today. But let's talk about the journey now. Mangalam is here with more on the road to 25,000. Mangalam.
Well, 25,000 is actually just a milestone in what is otherwise a long journey for the Indian equity markets itself. So I just thought it's a good time to look back and track that journey itself. The index started in April 1, 1996 with a base of 1,000. Over the next 11 years, in September 2007, it moved to 5,000. Between 96 and 2007, we of course had the IT boom, the IT bust, the Asian financial crisis, the big bull run as well. And then from there, we had the great financial crisis of 2008. Between that and 2017, the Nifty doubled again to 10,000. Thereafter, in quick succession, it moved to 15,000, 20,000. And now, as we speak, we are sitting on Mount 25,000. Between 10,000 and 25,000, we've had GST, we've had demonetization, we've had a couple of elections, we've had a couple of wars, we've had the major pandemic as well. But the cult of the equity market and the market kept moving on. So what it teaches you basically is that over the long term, irrespective of the events that are taking place in the near term, the Nifty has compounded at 12% since inception. What does this mean? It's doubled every 6 years. And what does this coincide with? For the last 23 years, the Nifty EPS itself has compounded at 12%. So whatever happens, if the earnings are moving in a certain direction, the market eventually will catch up. So at 25,000, the index trades at 22 times FY25 price to earnings. This is something that we will monitor going forward as well, irrespective of, again, the events. The last 5,000 points is what we're tracking right now in terms of moves. They've been led by, the PSE index, the public sector enterprises, the realty stocks, oil and gas, as well as some of the auto stocks as well. What hasn't participated as much in the last 5,000 points has been the IT index, the FMCG index, and the Nifty Bank, while they've moved, but not to the extent of the others itself. It's been a broad market rally. So SME IPO index is up 165 points. Small cap and mid cap indexes up anywhere between 40 to 50% itself. The top Nifty gainers, Bajaj Auto, Coal India, M&M, ONGC, basically IT, Realty as well. You have PSEs, Realty and the others. And if you look at the underperformers there, Bajaj Finance is actually down 8%. Asian Paints, IndusInd Bank, HDFC Bank, the biggest of the banks, down by about 1% over the last 1 year or so. But I've said it's a broader market-led rally. So we have Oil India, NBCC, Trent, all of them nearly trebling in the last 1 year or so. Oracle, Amara Raja up 150% as well. And here too, we've had a couple of notable losers. Z down 50%. We've had Naveen Fluorine down 20%. PVR Inox down about 15% as well. With all things said and done, as we sit atop Mount 25,000, what are the things that we are tracking going forward? One, will FIIs return to buy in cash market? This has been a largely DII-led rally. Second, now with the outperformance of the mid-cap stocks, is it time for large caps to take the baton and move forward? The third thing that we're watching out for is increasing retail participation in domestic SIPs. Does that continue in wake of all the regulations that are coming by as well? And finally, there are a lot of pockets of hefty valuations in the broader markets. Do they go away or not as well? And we obviously cannot discount the impact of geopolitics and global developments more on the market. So those are a bunch of things that we'll be watching out for from Mount 25,000.
Nifty started with 1,000 numbers in 1990 on the basis of 1995 November 3. And so in literally less than 30 years, it has given returns 25 times plus, of course, the dividend. Put together, it could be close to 28 to 30,000. And so if you're putting 1,000 rupees as an investment, today it would be almost 28 to 30,000. And in your hand, you will be having 25,000 rupees. And that's the way index is explained.
Okay, so 25,000 is done. Now, what next is the question. In earnings, Tata Motors reporting a 6% revenue growth in Q1, profits up 74%, even though tax expenses doubled compared to the same period last year. Margins expanded by 170 basis points. The revenue for Jaguar Land Rover has seen a growth of 5%, but EBITDA margins are down 50 basis points. JLR has also warned of production constraints in Q2 and Q3. The management says there was no immediate plans to leverage the Indian government's electric vehicle manufacturing policy, as it believes it will not be beneficial for JLR. However, Tata Motors does plan to increase localization in JLR production in India. ITC reporting a mixed bag for Q1. Profits rose by just 0.3%. Missing estimates. Sources say the company's volume growth has come in at 2%. This is in line with the lower end of the CNBC TV 18 poll. EBITDA and margins below expectations. Revenue, though, ahead of estimates, growing 7% year on year. Restaurant aggregator Zomato delivered a strong performance in the first quarter, with revenues rising 74% to above 4,200 crore rupees. Profits have come in at 253 crores against just 2 crore rupees a year ago. This is the fifth quarter in a row that Zomato's earnings are in the black. The company's reported a 27% rise in gross order value in its food delivery business and a 130% jump in its quick commerce vertical. A 30% rise in other income to 236 crores has also helped. Infosys has refuted claims of GST evasion made by both the central and state GST authorities. The tech giant has said it has responded to a pre-show cause GST notice of 32,403 crore rupees from the Karnataka GST authorities. The company has maintained that the demand is untenable as it relates to expenses incurred by the company's overseas branch offices. Industry body NASSCOM has weighed in on the matter. In a statement, NASSCOM says the issue at hand involves the applicability of GST through the reverse charge mechanism. NASSCOM said that this is an industry-wide issue and multiple companies are facing avoidable litigation uncertainty concerns from investors and customers. NASSCOM has said it had requested the Ministry of Finance to issue a circular to clarify the position so that industry can avoid this litigation risk. Take a look.
There is a business model issue and the circular is very clear. The law is very clear. I mean, this is nitpicking at the worst. And why are you doing it? What is the motivation for doing all this? That is what government should do. And why are you harassing companies? Today, business in India is living in fear. Business in India is living in fear. Tax rates, they announce everything. 60 to 70% of all appeals are lost.
They will have to create some sort of a provision. And why I say that is because whosoever wins at the initial stage, the matter will go up. it also appears that, if the amount is so huge, it may not go through the normal appellate provisions. Infosys may opt to file the writ petition and go straight to the High Court, because otherwise, through the appellate mechanism, they will have to shell out 10% plus 20% to file appeals at different levels.
Well, that's Infosys and reactions coming in there to the GST imbroglio. And of course, as NASSCOM pointing out, this is an industry-wide concern. Now, quick check of some high-frequency macro data. India's manufacturing sector showing resilience as per the HSBC Purchasing Managers Index. For July, the index coming in at 58.1, which is only slightly below 58.3 recorded in June. This also comes at a time when China's manufacturing sector is struggling for traction. The S&P manufacturing PMI for China in July dropped to 49.8, indicating a contraction in new orders. Gross GST collections for the month of July has come in at just over 1.8 lakh crore rupees. This is a growth of over 10% compared to the 1.65 lakh crore rupees registered in July of last year. With this, the government has collected nearly 7.4 lakh crore rupees as GST revenue in the first 4 months of this financial year. So good news coming in on the GST front. It's been a mixed start to the financial year in terms of macroeconomic data. In the April to June quarter, tax collections have been robust, as we just showed you. Income tax growth is at 50%, direct tax at 40%, corporate tax at 26%. Fiscal deficit is down, but capital expenditure from the government has been slow, and that's largely on account of the elections which took place between April and May. Now, CapEx is down 35% in Q1. Growth in the 8 core sectors also a concern. From a growth rate of 6.4% in May, core sector growth has slowed to 4% in June. The big newsmaker this evening, M&M's Group MD and CEO Anish Shah says the conglomerate is in much better place and expects a strong performance in the second half of the year. Also seeing green shoots in the tractor segment. Take a look.
On tractors in particular, we are seeing green shoots, clearly helped by the monsoons, but beyond that, government spending is up in rural areas. Second half should be fairly good as well. Navratri comes in at that point. So we're in a much better place from a tractor standpoint.
At some scale, would you like to demerge both the entities?
For us, if it makes sense economically to do that, we will.
Is there a scale in mind?
It's not a question of scale. The question is there more value for it together than apart?
Okay.
Right now, you see more value together.
At this point, we see more value for it together.
Well, that's Anish Shah. On to a CNBC TV 18 exclusive. 3 potential suitors for the acquisition of IDBI Bank have received a fit and proper certificate from the RBI. A significant step towards the privatization of the bank. Ritu standing by now with more details. Ritu, it's been a long time coming. Finally, the fit and proper certificates in from the RBI. Where does this leave the potential bidders?
That's right. We do understand from sources that 3 potential suitors have received the fit and proper certificate from the Reserve Bank of India for the acquisition of IDBI Bank. So Fairfax Financial Holdings, Emirates NBD and Kotak Mahindra Bank are the suitors that have been given the all clear by RBI to proceed to the next step. However, our sources do indicate that Kotak Mahindra Bank may not pursue the acquisition of IDBI Bank at this time, given that it itself is undergoing a transition with new leadership and is also in the middle of that tech ban imposed by RBI. So IDBI Bank may not be top priority. My colleague Sapna Das had earlier reported that the due diligence process for bidders will start in early August and that the government is expected to call for financial bids for IDBI Bank before the close of the current fiscal. Now, keep in mind that out of the 94.7% stake that the government and LIC collectively hold in IDBI Bank at the moment, the government is looking to sell 60.7% combined stake, including 30.48% held by the government and 30.24% held by LIC, along with the transfer of management control in the bank. And after the deal, the government will hold about 15% stake and LIC another 19%. Now remember, Fairfax holds nearly 40% stake in CSB Bank, and if it does pursue the acquisition and emerges as the winning bidder, then as the promoter of CSB, it could potentially explore a merger with IDBI Bank, but in the case of Emirates NBD, it may be a strategic acquisition. Now Fairfax India public investments include significant stakes in CSB Bank, in IIFL Finance, IIFL Securities, 5 Paise, and so on, while Emirates NBD, on the other hand, operates in India through 3 branches to serve retail, private, wholesale and NRI clients, and reported a total consolidated asset of about 6,300 crore rupees and profits of 60.7 crores as of FY23. All right, Ritu, many thanks. A long wait there for the IDBI Bank's
privatization process to kick off. FMCG major Dabur met street expectations in Q1. Revenue up 7%, profits were up nearly 8%, margins expanded by 30 basis points. Domestic volume growth of 5.2% in line with CNBC TV 18's estimate of 5 to 6% growth. Sun Pharma largely met estimates with its operational performance in Q1. Revenue up 6%, profits up 40%, margins expanded by 60 basis points compared to the same period last year. Sales in the US down 1% below what the street was expecting. Beleaguered edtech firm Byju and the BCCI have renewed their push for a settlement over a payment dispute of 158 crore rupees before the Company Law Appellate Tribunal. Byju's largest shareholder, Riju Ravindran, told the Appellate Tribunal he would settle the claim using personal funds from the sale of Think and Learn's shares between 2015 and 2018. This statement comes after US lenders allege that the settlement involves misappropriated funds. The tribunal has deferred the hearing to tomorrow. On to a CNBC TV 18 exclusive. First Cry's parent Brainbee Solutions will launch its IPO on the 6th of August. First, the price band has been fixed in the range of 440 to 465 rupees a share. The IPO consists of a fresh issue of 1,666 crore rupees. On the upper price band, the OFS is valued at 2,527 crores.
With such a large market which is growing at a 20% CAGR, it is bound that we will have a journey of our own. If you look at our India multi-channel, it's actually already profitable. We have been profitable for last 4 years in adjusted EBITDA basis. Our last year adjusted EBITDA was around close to 8.8% for FY24 for our India multi-channel business.
Well, that's First Cry and Ola Electric's IPO to also open tomorrow. On to CNBC TV 18 exclusive. Union Labour Secretary Sumita Davra says a draft policy for the employment-linked incentive schemes announced in the budget will be ready perhaps in the next 4 to 6 weeks. Speaking to me earlier, the Labour Secretary also said that she expects the schemes to be rolled out this calendar year. Take a look.
4.1 crore comes 2.9 crore from the ELI, another 1 crore from internships, and 20 lakh from the ITI's trainings. So a total of 4.1 crore over the next 5 years. We do feel in the ministry that another 4 to 6 weeks we should be ready with the draft scheme. And as you know, there will be interministerial consultations, and then it will go for the EFC, after which it will go to the cabinet. We see a rollout little later in the year, and definitely in this financial year.
Well, that's the Labour Secretary. Up next on India Business Hour, 8 Indians killed while serving in the Russian army, says India's External Affairs Ministry to Parliament. That and more coming up. You can catch all of CNBC TV 18's news and updates on Facebook, X, Threads, Instagram and JioCinema. Two days after multiple landslides struck villages in Kerala's Wayanad, search and rescue operations continue even as hopes of finding the missing fade by the hour. The death toll now stands at over 250. The Kerala government had earlier said that 240 people were missing. The Army, Navy and Coast Guards are assisting NDR. All of this, the centre and the state government have got embroiled in a fresh controversy. Home Minister Amit Shah says the centre gave the state advance warning as early as the 23rd of July regarding a possible natural disaster in the area. The CPIM-led Kerala government said that a red alert was issued with the district only after the landslides hit the area. Harish Upadhyay brought us more from Wayanad.
Finally, the Mundakai village, which has been hit by the terrible landslide, will get an access road to the rest of Wayanad district thanks to this Bailey bridge that's almost complete. This is likely to be put to use by the end of the day today, and this will speed up the process of rescue and rehabilitation as well. This is something that the Indian Army has been working for the past day or two, and finally it's reaching a stage where it can be put to use. This can be used to also ensure that light motor vehicles also can travel to Mundakai. That would be very crucial, whether it's ensuring that bodies that are retrieved are taken to the hospital, government hospital here, or even ensuring that the essential medical facilities and medical treatment that the tribal population in the tribal hamlets that are in the hills up in Mundakai, they can reach there, they can ensure that they are safe. That's one of the priority of the Kerala government. In the meanwhile, as the death toll increases, the government now turning its focus towards ensuring that contagious diseases don't spread. It's also influenza season, so the government says they are taking steps to ensure that the diseases don't spread, and if there are any people who are surviving, help can reach them as well.
A terrible time there in Wayanad, and equally terrible in Himachal Pradesh, where 2 people have been killed. Over 50 are missing after cloudbursts in Shimla, Mandi and Kullu districts of Himachal Pradesh. Authorities have ordered the closure of schools and colleges in Kullu and Mandi. And heavy rains and flash floods threw life out of gear in Uttarakhand as well. At least 10 people have been killed in rail-related accidents since last evening. Over 1,000 pilgrims who were stranded in different parts of Kedarnath have been evacuated. On to the latest from the Supreme Court. In what comes as a landmark judgment, the Supreme Court today has upheld the state's power to grant separate quotas for more backward groups within the scheduled caste and scheduled tribe categories. Now, the apex court in a 6-1 majority has overturned a previous ruling that ruled that subclassification was anti-constitutional. However, the court has also had words of caution for states. Ashmit joins us now. Ashmit, take us through what the Supreme Court's rationale is to turn down that previous verdict, and more importantly, what are the guardrails that the court is asking states to put in place?
Well, a landmark verdict coming in from a 7-judge bench. In fact, speaking of the 7 judges, by way of a 6-1 majority, the apex court has held that the states are competent, have the power to make a law to introduce what many are calling a quota within a quota. The states are competent to introduce a specific quota within the SC/ST quota to aid and assist certain communities, certain backward communities within the SC/ST quota. Now, what is the rationale that the apex court is given? Well, the Supreme Court says that the SC/ST community is not a homogeneous community, it's heterogeneous rather, that there are some communities which do better in terms of representation, in terms of socioeconomic standards, that there are some which continue to be backwards, that they may require assistance, and that the states should be at liberty to come out with policy measures, including this quota within the quota, to assist those backward communities, and that is something that is also constitutionally tenable. There's no provision in the Constitution which bars that. However, the Supreme Court has also said that there are some guardrails which are required. Number one, the Supreme Court holds that this has to be based on empirical data. Any such quota within the quota cannot be based on whims or political expediency. There has to be empirical data which identifies the backwardness of the community and the opportunities that are required by way of this reservation. Also, second, the Supreme Court points out that any such legislation or a law that the state comes out with will be subject to judicial review. That means it can be challenged in a court of law to test the law, whether or not it is consistent with constitutional norms. So the Supreme Court, 7-judge bench, allowing a quota within the quota, but with guardrails.
Ashwin, many thanks. The government has said that 8 Indians serving in the Russian armed forces have lost their lives. In a reply to the Rajya Sabha, the Minister of State, Kirtivardhan Singh, said that 12 Indian nationals have already left the forces, while another 63 individuals are seeking early discharge from the Russian army. The junior minister added that the government has taken up the matter with Russia. Now, here's a CNBC TV 18 exclusive. We learn the government may soon take a decision on whether to continue or discontinue the current sovereign gold bond scheme. Sources say this matter is likely to be decided on in September. Remember, as we had reported earlier, the government is not comfortable with the fiscal cost of these bonds in the current state. Sapna's joining us now with more. Sapna, the likelihood of the sovereign gold bond scheme continuing post-September, what's the expectation? What's the sense that you get?
Well, the expectation certainly is not looking extremely bright in terms of the scheme continuing because, as we have been pointing out earlier also, there are fiscal costs that the government has to bear, on this scheme right now, given the fact the way the metal prices have rallied, gold prices have rallied, and plus there is a lot of tax rebate under the scheme. It also carries a 2.5% annual interest, so to speak. So, it's quite likely that a full review will be taken up in September when the H2 borrowing calendar is decided along with the Reserve Bank of India, and a decision will be taken whether to continue or not continue. So, if the government and RBI decide not to continue with the sovereign gold bond scheme, what it means is that there won't be any further issuances. That's one. Now, the second element that we also need to keep in mind is that on two fronts the government is pretty uncomfortable. One, of course, that is one of the most expensive borrowing tools for them in terms of financing the deficit. and also some clarification coming in that this is more of an investment scheme and not a social security scheme, say like the small savings where you have a PPF or a Sukanya Samriddhi, where the government is bound to make good whatever money that is coming in, that needs to be paid at a certain interest rate, along with some tax incentives, at least for one or two of the schemes. So that's the second rationale. Third, of course, as of now, we are given to understand that there is no alternative on the table to the SGB, so to speak. But of course, a call will first have to be taken, whether it's to be discontinued or whether it's to be continued at all or not. Now, 18,500 crores is what the government has penciled in as tentative borrowings from the SGB. Now, in case there are no other fresh issuances, if the scheme does not continue, it may be just possible that this borrowing will not happen. So that could be the other likelihood. We need to keep all of this in mind, and it's going to be a conscious call between the RBI and the Government of India.
Sapna, many thanks for joining us. It's day 6 of the Paris Olympics and Indian shooters continue to find their target. Olympic debutant Swapnil Khusale bagging a bronze in the 50-meter rifle 3-position event, getting India its third medal. Indian shuttlers had a mixed day. Lakshya Sen advancing to the quarterfinals of the men's single event after defeating compatriot Pranoy in straight sets. However, the duo of Satvik and Chirag lost their doubles quarterfinal match against the Malaysian team. Well, that's it then on this edition of India Business Hour. But before we go, CNBC TV 18 has had a viewership of over 91% on Budget Day. For the last 25 years, this has been your budget destination. And we want to thank all of our viewers for tuning in, for your support, for your feedback and encouragement. On Budget Day, we had the country's best, from the budget makers themselves to the top ministers of the government to the best economists, market experts, corporate leaders, decoding the budget in real time. We also got you a brand new look. We had new augmented reality and virtual reality sets enhancing the viewer experience, making the budget far more immersive. So I'm glad that you liked our CNBC TV 18 special budget coverage, and thank you for continuing to make us India's budget headquarters.